Hello, welcome to the Smart Knowledge U Daily Gold, Silver, and How to Survive Financial Armageddon video. Today I just want to talk about the much anticipated Federal Reserve meeting this upcoming Thursday, tomorrow, one day from now. And a lot of the news in the media about this is that there's a certain level of quantitative easing that will be required to keep the markets happy or not to disappoint the markets, which I think is really, really odd language to begin with, because whenever we talk about quantitative easing, we're basically talking about counterfeiting the existing amount of dollars out there, thereby destroying the value of savings for every single person in this world, and particularly Americans that hold US dollars. And people talk about anticipating quantitative easing like it's a good thing. The words that are used is keep the market happy, not to disappoint. In fact, people should be disappointed when there's quantitative easing, because that just means your existing savings is being counterfeited by the central banks, and the amount of savings that you have will just be able to purchase less in the future. So it makes no sense whatsoever, but that's the way the financial media tends to spin it. The numbers that are being thrown out there are around $750 billion, $1 trillion, some people even say $2 trillion are necessary to keep the markets happy. But it doesn't really matter, because if you look at the rise of the general stock markets like the Dow and the S&P 500, it pretty much looks like that the quantitative easing, whatever it may be, is already marked in. And if it doesn't come to fruition, if it doesn't happen, then pretty much look out for a pretty strong correction right now, because the market certainly expects some quantitative easing in one form or another. And the other thing I would like to say is that whenever people talk about gold and silver, they also put way too much emphasis on whether or not Ben Bernanke is going to announce more, the creation of hundreds of billions or trillions of more US dollars out of thin air, as being vital to the direction of gold and silver. And I just don't see that at all as being the primary driving force. It's basically people's loss of confidence in the two primary international reserve currencies right now, the US dollar and the euro. So it's going to be more a continuing lack of confidence in these two currencies that are going to drive the price of gold and silver higher, and not any quantitative easing. Because when you think about it, although quantitative easing has only existed for several years, it was a coin termed and invented by Ben Bernanke. The U.S. Federal Reserve have been executing quantitative easing ever since they came into existence in 1913, because that's what they do. They create money out of thin air, they counterfeit, and they devalue and debase the US dollar. They've been doing it for 100 years, so they've been engaging in quantitative easing for 100 years. So that is not the primary factor that's going to be important to the price of gold and silver long term. It's going to be the utter loss of confidence of governments worldwide, of people worldwide, and fake, bogus fiat paper currency that is really going to drive the price of gold and silver long term. So whenever Ben Bernanke speaks and whatever he says about quantitative easing, if there's a temporary short-term dip in gold and silver prices, then, well, that's just an opportunity to stack more, because it really has no consequence over the long-term value or price of gold and silver, because it will always basically, central banks will do what they do, whether it's the Bank of England, the Bank of Japan, the Bank of China, the U.S. Federal Reserve. They will always debase their currency. So that's a given. So the major equation is the fact that you have 100 years of fraud, and in some cases, some countries even longer than that, coming to a head, and people's loss of confidence in paper, or really, more realistically, digital currency. Okay, so that's it for today. Until tomorrow, take care and have a great day.